Hey guys, it's Duro-Fadipe here. How are you doing today? I hope you're doing really well and I hope you're keeping safe. Okay, so today I want to share with you how to trade crash and boom with inside bar breakout strategy. Now, this strategy is a very simple yet very effective strategy. Okay, and just before we proceed, if you haven't subscribed to this channel, please go ahead to do so, and also make sure to click on the bell buttons, on the bell right beside the notification bell, so that every time I upload something you get a notification. All right, so let's get right into it. How to trade crash and boom with inside bar breakout strategy. Okay, at the inside bar. So first, what is an inside bar? Okay, remember I told you this is very effective yet simple price action candlestick pattern. All right, now the pattern consists of what we call the mother bar and a baby bar, or you may call it an inside bar. Okay, the high and low of the inside bar for any bar at all, right? Like I said, okay, it's the candlestick pattern is a two candlestick pattern. All right, now for any candlestick at all to be regarded as an inside bar, then it must be within the high and low of the preceding bar. All right, here is what I'm saying: high and low of the preceding bar. This is the mother bar, is the preceding bar in this case, and this is the mother bar, and here we have an inside bar. Why is this regarded as an inside bar? Because the entire range plus the wicks of this candle, as you can see, is falling right within the high and the low of this preceding bar. So here's a preceding bar and here is an inside bar, because the whole candle, this entire candle, that's including the wicks, is within the high and the low of the preceding bar. So this is an inside bar and this is a mother bar. All right, hope that's clear. All right, so then how do you trade the breakout? All right, now look at this. Note that you can have more than one inside bar. You can have more than one. You can have series of them. You can have two, you can have three. All right, now take a look at this image. This is the mother bar and here are the inside bars. Okay, now we have the high. This is the high of the mother bar and this is the low of this mother bar. Now this is how the strategy works. This strategy, now when you have bars within the high and the low of this mother bar, it's an indication that the market is consolidating. The market is this right now, it means the market is ranging, it's moving sideways. That's why it's not able to break the high or the low of the preceding bar. All right, now here's what the strategy is. When it breaks out of this range, then we'll say that it's coming out of consolidation, and you already know what happens outside consolidation. After consolidation comes either a breakup, as it breaks up, or a breakdown, right? It breaks out in the upward direction or it breaks out in the downward direction. All right, now in this case, is it going to break upwards or break downwards? We do not know. All right, but what we can say for sure is inside bars, this market is consolidating because we have a lot of inside bars within the high and the low of the mother bar. All right, so if the high or the low of the mother bar breaks, then a significant movement of price may occur. Now as it is now, it is still ranging. It hasn't broken either this way or this way, so this market is still ranging. But then the moment it breaks, either breaks upwards or breaks downwards, then most of the time you're going to get significant movement. All right, significant movement. But then remember that we can't tell which of the directions is going to break towards. All right, but in a bit I'll show you how to put this to use very quickly. Now we have this image. Just take a look at this. Here is a mother bar. As you can see, this bullish candle is a mother bar, right? And here is our inside bar. Why is this an inside bar again? This bar is within the high and the low of this preceding bar. this pattern is something like a flip side of an engulfing bar. All right, you know that in an engulfing bar you have this one engulfing the previous one. All right, when this one is the preceding candle that is engulfing the next candle. All right, so that's, it's like a flip side. Here is another one, here is another inside bar. All right, and in this case you notice that this inside bar, there was a break, it broke out, but when it broke out downwards. All right, it gave us a bearish move. All right, let's come back to this one that's been marked right here. Okay, now look at this once again. You see that here we have a bullish bar, right? And the following we have a bearish bar following it, but then the high and the low of the bearish bar is right within, as you can see, it's right within the high and the low of the mother bar. Is right within the high and the low of the mother bar. All right, so what you do in this case is look at this, where is the high and where is the low of the mother bar? Here is the high, here is the high of the mother bar, and here is the low of the mother bar, right? Here is the high. Oh, okay, this was taken, this and this inside bars are the ones we were reviewing in this one, this and this inside bars. Okay, because this candle, then these are all inside bars. As you can see, all of them here are inside bars, all of them are inside bars right here. Okay, now here is the mother bar, here is the mother bar. We're considering this mother bar and this inside bars. Okay, now here is the mother bar and here are the inside bars. Here above here we have the high, this is the high of this mother bar, right? This is the high of the mother bar, and here is the low of the mother bar. Now all of these other candles, as you can see, all of them are within the range of this one. All right, now this is what is called, this is what we have here now, is this bars within the mother bar, right? So what do you do next? We want to wait to see where the price is going to break. Is it going to break upwards or is it going to break downwards? And as you can see in this case, it broke downwards. Here is the line, here is the line, here is the lower line, and here is the upper line. So if it breaks above, then we expect it to make a bullish run. All right, and if it breaks below, we expect it to make a bearish run, just like what we have right here. This is market price making a bullish run after it broke out of this range. Okay, after it broke out from this inside bar, look at this, we now had a sell, so it sold all the way. Okay, now in this case, how do you set your stop loss or your take profit? All right, how do you set your stop loss or your take profit? I'm going to show you that in a bit. Okay, but before we do that, I'm going to show you that just before we get into this. All right, okay, now here's how you put everything together. All right, I'm going to take you to the charts shortly, but I want you to first get the theory, get the concept properly before we go right to the chart. So the first thing you want to do when we're trying to pull this together, the first thing you want to do is ensure that you determine the trend. Okay, and when you determine the trend, you are now going to be looking out for a breakout in the direction of the trend that you have identified. Now look at this. How are we determining the trend in this case? We're using EME 21, exponential moving average 21. Okay, so when price is right above this line, we say it is a bullish trend, and when it's below, we say it is a bearish trend. Okay, so that simply means that if you're seeking to get breakout above this exponential moving average 35, we'll be looking for a bullish breakout. Okay, now here is another one. After you have identified the first step, like I said, is to identify the trend. The second step is to find an inside bar breakout in the direction of the trend that you've identified. Okay, now look at this. Here is an inside bar. Again, why is this an inside bar? Because we have inside, these are inside bar. This is the mother bar, right? This particular one is a mother bar, and these are inside bars. All right, why is this a mother bar and why are these ones inside bars? As you can see, the highs and the lows of these two candles are within the highs and the lows of this preceding bar. All right, so this is a mother bar and these two are the inside bars. Okay, and like we have, as I said earlier, you determine the trend. Look at where we have the line exponential moving average 35, which means this is actually a bullish. This market is in an uptrend. Okay, so what we are going to be looking out for in this case will be a breakout in the upward direction, in the direction of the trend. All right, now we are going to expect to get a breakout upwards. Okay, so here is what we are going to expect. We're going to expect it to break out here. Okay, so if you had entered your buy here, you would have been able to catch this run. All right, if you had entered your buy here. So how do you do this? You can, instead of waiting for this breakout, instead of waiting for this to break out, you can actually put your pending order right above, just slightly above this eye. Okay, just slightly above. Just give it a little allowance. All right, and place it just slightly above this line. Okay, so that when price comes to that part, it triggers it and you are in this trade. So what do you use as your stop loss? Your stop loss will be the low of this bar. All right, the low of this bar is then used as your stop loss. Okay, you understand this better when we get on the charts. First, I just want you to understand the concepts, the underlying concepts first. All right, now how do you work with the pending orders? That's what I want to show you quickly. Now look at this. This is an example of a bullish market, right? It is in an uptrend. You can see that the candles are right above the exponential moving average 21. So this tells us that this is a bullish market. All right. Now here we have inside bars and this is a mother bar. All right. So if you want to set this up, you would have to. Here is the down. Here, what we have right here is is the breakout in the upward direction. So you could have set your pending order right here, just right above the eye of this candle. You set up your pending order, all right, and we anticipate that it will break upwards, and indeed it broke upwards here, and so we could have entered this trade and we could have, gone with this run. We could have joined this run, right? Good. Now here is another one for the sell order. How do you do this? Now first, you have to identify the trend. I said that's the first step. Now if you have identified the trend and you've seen that this is a downtrend, okay, so what we want to look out for is breakout in the bearish. I want to look out for a bearish breakout in a downward trend, in a downward, breaking out downwards. All right, so look at this. We again have a mother bar and inside bars. All right, now we have inside bars. All of these are inside bars. Okay, now all of this are within the high and the low of this mother bar, but then we are looking for a breakout downwards after this consolidation, because this is a period of consolidation. Okay, so then we're waiting for this to break out downwards. All right, so we are going to place our selling order, our pending order, just beneath the low of this mother bar. Here is the low of the mother bar, just a few pips away from this mother bar. You see it? We put it there, then you expect it to break out of this range. Okay, and if it breaks out of this range, it will trigger your pending order right here, and so you'll be able to make this run with the market. All right, again, your stop loss should be the eye, this eye, the eye of the bar, the eye of this mother bar should be your stop loss. All right, should be the stop loss, the eye of this. So just in case it pulls back into this zone, this should be your stop loss. All right, I hope that is clear. Once you do that, then you can then take the run all the way down. Okay, let me show you that here. Okay, now take a look at this. Our stop loss, you see that the stop loss has been placed on the eye of this candle. All right, the eye of this candle is where the stop loss will be. All right, then the take profit, I'll show you that. Okay, so the low of the inside bar for a bullish breakout. Now in this case, what we are having is a bearish breakout. Okay, so the eye of the inside bar, this is the inside bar. the eye of it will be, this is the inside bar, so the eye of this inside bar will be the stop loss. Okay, I hope that makes sense. Okay, so how do you take your profit? You take your profit at the swing low or swing high. In this case, this is a bearish run, so we are going to have it at our swing low. So this is where we are going to take, this is our swing low. All right, so our take profit would have been somewhere here. So you would have taken our profit somewhere here, or you hold on till it gets to the next support. All right, that can be used as your take profit. I hope this makes sense. I hope this makes sense to you. This is an amazing strategy. It works. It requires that you practice. Make sure you practice this, and I'll be waiting to get a feedback from you. Now, if you're ready, trade crash and boom, again, you may have heard about our swing commander. And if you're already trade crash and boom, but you prefer, I know a lot of people prefer that they get put their hands and lay their hands on, and maybe an indicator or a system that can just give them a go and give them, tell them when to come out of a trade and probably tell them when to go into a trade. Now, I'm delighted to introduce to you once again the swing commander. All right, the swing commander is that system that's going to help you achieve that. Now, coupled with the knowledge of price action and market geometry, you'll be able to put this to the best use possible. Even if you lack the knowledge on all of those, you still find it useful. But of course, in the inner circle, the whole idea of this system is to make it complementary, so that when you are seeing this, you're complementing it with your knowledge of price action, market geometry, and market structure. Okay, that is what this is meant to help us achieve. All right, now this is again exclusively for members of the inner circle. All right, and all you need to do to have access to this is just reach out to me and find out how you can become a member of the inner circle, so you can lay your hands upon this. Again, it's yet to be launched. All right, we're putting final touches to it, and it should be launched before the end of next week. All right, so feel free to reach out if this looks like something you would like and you have to have access to this. Reach out and I'll tell you exactly what you need to do to be a member of the inner circle. Now, let me tell you how this works. Now, here is an indication of a sell, and here is a 15 minutes chart. Okay, there is a 15 minutes chart. So if you enter this trade right here, you could have held on from this point up until here till you have a counter signal. And at the point of getting a counter signal, you change your position and you go for a buy. So right here, this is helping you take the position swing to swing, from an upswing to a downswing, from a downswing back to an upswing. You take it back down, downswing, upswing, downswing, upswing, like that. Okay, so you can do this, and of course it can be used on a higher time frame, 1 hour, 4 hours. All right, and with that you can actually hold on to trades for hours. All right, you won't have to babysit your trades, and you can do whatever you're doing without having to worry about monitoring your trade every second. All right, so you may want to consider joining the inner circle. In the inner circle, you're going to have access to that. Now, why do you want to consider joining the inner circle? All right, that's because we have hands-on price action and market structure training on Zoom. You have access to our jealously guided trade setups. All right, and you access all right, our tested and trusted complementary indicators. Now, high probability confluence trading approach. All right, and you access groundbreaking strategies plus general binary.com support. Okay, so you may want to consider joining the inner circle for this reason. Okay, if this interests you or you'd like to make inquiries on how you can, just reach out to me on this number. All right, you can reach out to me on WhatsApp. WhatsApp, that's my WhatsApp number. Feel free to reach out and we'll discuss on how to get you to become a member of the inner circle. All right, with that said, let's get right on our chart. All right, so quickly, let's get on the charts so I can show you how to practically do this. All right, okay, so I marked up a few inside bars right here so we can use to see how this works. Okay, so let's take a look at this one. Let's take a look at this one. Now here is a mother bar, and here are the inside bars. All right, so you want to, let's mark this out so you see that this is actually an inside bar. Look at this. Here is the top of the bar, and here is the bottom of the bar. Here, bottom of the bar. Now take a look at this. You notice that these three candles following this are inside bars, all right? And remember that we said that if it's a downtrend, then we expect that it will break downwards. If it's an uptrend, we expect that it will break upwards, all right? So what we would do, instead of waiting for this to actually break out, we could have just put our sell stop around here. We could put our, let me change the color of this one. Let's make it yellow, make it yellow. Okay, great. Now we could have put our sell stop just somewhere around here, all right, in anticipation of this breakout. But check this out, this breakout actually happened, right? Now here we'll put our sell stop, then we'll anticipate that this will break out, and in fact it did. And note that this is a 1 hour time frame, which means that you could have been in this trade for close to about 5 hours. You could have been selling for about 5 hours. See how relaxing do you think this is, guys? This is what guys in the inner circle are already enjoying. All the tips on how to do this, but you check this out and tell me how cool you feel this is. All right, now think about this. This breaks out all the way down for about 5 hours. You are going to be selling. All right, now where do you use as your take profit? You use your take profit. This support could be your take profit. This support could use this support as your take profit. All right, that's it, guys. This is one. That is one that you in action. That's a breakout. That's a mother bar breakout, inside bar breakout, if you will. And that's it. Now let's take a look at this one. Here is another mother bar, inside bar. All right. Let's mark that out. Let's mark that up. Let's mark it up. I'm going to mark that up. Look at this. This is the upper week, right? And here is the lower week. All right, here is the lower week. Now take a look at this, right? We are going to say, well, if this is a downtrend, and we're going to anticipate that to break, there will be a bearish breakout, and if it's on an uptrend, we'll anticipate an upward breakout. That's a bullish breakout. All right, now in this case, you could have just placed your bullish, I've just put your buy stop here, just a few pips away from the top here, all right, and this breakout would have triggered it. And remember that you're supposed to take it till probably the next support or your higher high, whichever one, or your swing high, whichever one happens first. But in this case, I think the support, the resistance happened first, all right. The resistance happened first in this case, so you could just come out of this resistance. And remember, this is about 1 hour, which means you were in this trade for close to 1 hour. Fair enough. All right, that's that. I'm going to let's check some more. I think I marked up some more. All right, no cherry picking in this, guys. I'm just the ones that just pop up are the ones that I'm dealing with. Okay, now here is another one. Let's check it out. Let's check it out. Okay, let's see this. Here is the upper week, and here is the lower week. All right, now you notice that this is an inside bar, right? You notice that this bullish candle is within the high and the low of this candle, right? Which means this is an inside bar and this is a mother bar, right? Now note that when this broke downwards, we had this run. Okay, it could have broken upwards, could have broken downwards too. So, but you envisage which one is more likely in this circumstance, under this circumstance, which is more likely. Now, this bearish is more likely, right? That's because it's on the downtrend. Okay, so we could have just placed our sell stop here. Just your sell stop, place it just below the low of this. All right, just below the low of this candle. That's where you're going to put your sell stop, and then it would have been triggered the moment it broke out of this. This would have been triggered, and you would have been able to just do this. You would have been able to make this run. Okay, you're supposed to make this run till the next support. Okay, you're supposed to have marked up your support. So You're supposed to take it to the next support. Either you take it to your next support or you use your swing low. Okay, so you're supposed to have marked up your support, mark out your support, mark it up on your chart, your support on your daily time frame, on your H4. You're supposed to have marked out your marked up your support and your resistance. So this should be resistance if you check it very well. Although we didn't start the analysis from top down, but if you do that, you find out that there's actually somewhere, there's actually something like a support around here. All right, now after this breakout, then it sold all the way to this point. This, if you count, you have about 1 2 3 4 5 6 7 8 9 10. This is about 12 hours of selling, guys. 12 hours of selling. How cool is this? You could set up this chart, go to work in the morning, and come back in the evening to still come and see that this chart is still running and you're in massive profit. Now, this is what the inner circle is about, guys. Making your trades, in a very relaxing, making your trades without panic, being able to take trades and you still go about your normal life without you having to babysit your trades. All right, that's one. I'm going to show you, this is probably going to be the last one. Okay, okay, let's take a look at this. Here we have another inside bar. Okay, that's one, that's two, that's the upper shadow, and here is the lower shadow. All right, so this is an inside bar. All right, now look at this. You could have placed your buy stop just at the top of this line, all right, a few pips from the top of the candle. Then your stop loss should be where? Your stop loss should be at the base of this candle. All right, base of this candle should be your stop loss. The base, that's the wick, the lower wick, should be your stop loss. In this case, there's no wick, so here will be your stop loss. And you now envisage that this will break out and make a bullish run. Okay, so you could have just placed your buy stop around here, a few pips away from that top, maybe here. Okay, and guess what? This broke out, and when it broke out, it made a bullish run. So you could have entered this trade, and this is crash. So you could have remained in this trade for how many hours? 1 2 3 4 5 6 7, maybe 10, maybe 8, maybe 10 hours. All right, maybe 10, maybe 8 hours. All right, now this is what you are going to do here. All right, then you take it to either your swing high. I'm supposed to look for a swing high, or you either take it to swing high. All right, your swing high, or take it to the next support. Okay, to the next resistance. Okay, that's it. Oops, let's take one more. I think I marked one more, and that will be all. All right, now look at this one, and this is going to be, oh, I think I marked two more, but quickly let's just check this. All right, now look at this once again. Here is the upper shadow, right? And here is the lower shadow. Okay, now we are going to anticipate that there will be a breakout again. Now guess what? These are inside bars. Okay, and after this breakout we have this bullish run. So you could have placed your buy stop here in anticipation of this run, and guess what? It happened, and it bought for how many hours? 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 16 17 18 19. This is close to 24 hours of buying. You're supposed to buy for till support, so yeah, till resistance, sorry. You're supposed to buy till resistance, so you're supposed to have marked up your resistance, remember? So you're supposed to keep buying till the next resistance, or till the swing high, or the swing. You're supposed to buy it to a swing high or to your resistance, whichever one happens first. So in this case, you could have remained in this trade for close to 24 hours. All right, guys. These are other tips, what you are going to be having access to from big. If you are a member of the inner circle, you're going to get more detailed explanation on how this works and how to ensure that you only take high probability trades and not trades just for the sake of it. All right, we only deal with high probability trades. All right, so here's another one. Here we have the upper, here we have the lower, All right, now what do we expect? What are we anticipating? We're anticipating that it will sell or it will buy, right? So if we had put our sell stop here, it would have triggered at this point and it would have sold all the way down to the next support. So you could have you could have sold all the way to this point. Now, if you sold all the way to this point, this would have been about 1, 2, 3, 4, 5, 6, 7. This is about 7 hours of selling. All right, this is 7 hours of selling. This is how this works, guys. This is how it works. All right, but remember, you have to be sure what the trend is and you anticipate it in the direction of the trend. Okay. Okay, now here, okay, here is a bullish trend. Here is a bullish engulfing. That's what we're looking for. All right, that's about it, guys. That's about all that I marked up here. But let's quickly check this one. I didn't mark this up, but I just spotted it. So let's quickly see this. Okay, this one fits in. This one fits in because the wick of this candle is outside this, so it might not fit in. But well, it could also work. You know, all you need to do is just anticipate that there will be a breakout here just outside this bar. Then take it, do a buy, then do it to the highest, to your swing high. This is a swing high, right? Do it to your swing high so you could have remained in this trade and taken it all up until this point. I hope this makes sense, guys. I hope this makes sense. This is another one that looks like an inside bar. Here, this one, this one. Okay, now look at it. After this slight consolidation here, it broke out and it was bullish. So you could have also taken this trade to the next resistance. All right, this is how this is done, guys. The inside bar breakout strategy. This works. All right, this works. But of course, you need to have marked up your support and resistance top down. Okay, now if you do this, you should have very good results using this. All right, thanks for paying attention. And again, if you like to become a member of the inner circle, you already have my contact details in the description. Feel free to reach out and we'll work out something for you. All right, thanks a lot for paying attention and I'll see you on the next one. Bye for now. So we can see how inside bar actually plays out in real time. Okay, okay, so here it's